Hey Marco.
Hi Mike.
Hi. Everybody's so positive at North Star at the moment. Why?
Well, we've had 3 marriages, 1 baby, and 1 engagement. So I think there's an air of positivity. But jokes aside, the business is moving ahead nicely. We're growing, which is clearly very positive. And by and large, I think there's a good mood and good. We're in a good space.
There definitely is. I can sense it. Repeatable process, deep research. How's that manifesting, and how did it manifest in Q3?
So we obviously a bottom-up manager. There's the aim of this process is to allocate capital, our clients' money, to the right sectors and stocks. That will lead to good medium-term returns. We're not chasing returns. We're not chasing sectors that are doing well. We're looking to allocate in a very orderly fashion to avoid capital loss. So if we look at the third quarter, we've had an interesting time both locally and offshore, where you've had, let's call it a bifurcation of returns. Locally you've had SA-sensitive assets which have done reasonably well, and you've had precious metals that have shot the lights out. Similarly, offshore you've had AI optimism, which has been a theme that has dominated, while the rest of the markets, bar emerging markets, have done relatively well. So when we look at our process, our process looks to allocate medium term. We've lagged some of those precious metal trades, but we've allocated for medium term returns. So we're comfortable with that. We understand we're not going to be at the forefront of all returns all the time, but we're comfortable with how the fund is positioned.
I've always loved your conviction, your belief. And recently you wrote so eloquently about SA Inc.
Yeah, thanks. Obviously, the SA Inc. trade has been stop and start for the last 6 months. There's obviously a valuation argument that gets thrown around quite a lot, and we would agree with that argument. We think that banks look extremely cheap, retailers have been derated since Jan. You look at a number of industrials that are showing a huge upside. But what I think that the market is not taking into account is the fact that the next 18 months are likely to be highly supportive for that trade. You've had the rand that has moved from 19 to 17. Inflation has been very well contained. You've had bond yields that have rallied 200 basis points. So, and when you look ahead, we would be surprised if consumer expenditure and the health of the consumer doesn't improve from here on out. So, we like the valuation argument, but we also like the investment case for that sector.
The themes that keep coming up at North Star in the boardroom, we believe, so we have a deep sense of belief, and we strive for small, incremental, consistent growth.
I think the aim of the process is to not allocate capital in a reckless way. We look for incremental returns, and we don't look to chase returns when things aren't necessarily going exactly how you plan them out. So our job is to allocate capital in a very disciplined fashion.
And Marco, your outlook for the next year?
Yeah, it's always very hard to kind of give an outlook for short-term periods. But if we look at the next 18 months, I'd be very surprised if SA assets don't show incremental growth, particularly given the outlook that I mentioned earlier, and the amount of positive events that are likely to come over the 18 months, such as coming off the blacklisting, growth capital formation improving, and so on. So we'll be very surprised if that doesn't happen. When we talk about other trades, potentially might see precious metals continue to rally. But we think that trade is looking fairly stretched at this point in time.
I like what I hear, Marco, and I always say it to you. Be curious, not judgmental. Thanks.
Fantastic. Thanks, Mike.